Welcome to Financial Self-Reliance, where we help people how to manage, protect, and grow their money. I have a special episode today. We're going to be talking about real estate and mortgages with my good friend, Jodie Luke-Carter. Now, she's a real estate agent and a mortgage professional. She's been doing both for many years. In fact, she's the one that sold my house when I moved from California and helped me buy a new home when I moved to Utah. So she's my agent. She didn't do our loan because we had somebody else do that. Another buddy of mine do our loan, but she is a fantastic real estate agent. And then she also does loans in both states, right? And do you do loans all over the country, or just what
Yeah,
states do you do loans?
country. Most of them are in California, Arizona, Utah, Nevada, and then a couple in Texas and Florida. So, but I can do all over, but those are probably the places that I do most.
Awesome. So if you guys are listening to this and you're in some state of the United States and you need some help with a good loan officer that's going to give you the right information, yeah, here we go. We'll put her information in the description below so that you can click on that and reach out to her as you need to. But wanted to just kind of get some education going here on what are you seeing in the marketplace? I know we've heard, well, it's not quite as loud anymore, but I know there was a big loud noise about a housing bubble and a crash and some of these other things. Are you seeing the market staying pretty strong right now in terms of real estate?
You know, we are. Yeah, we did hear a lot about that, but we have still not enough inventory. So, because of that, things are still staying strong. I mean, yeah, prices have leveled out a bit, and that's just because of rates. But
Hmm.
right now, if you price your home properly and it's on the market, it's still getting multiple offers. I just had a client yesterday that we put an offer in and there were four offers. I mean, it's not crazy like it was, and nobody went way over and it wasn't crazy, right?
Hmm.
Still very strong demand for good housing right now. hmm
Oh, that's good to hear.
Yeah.
So did you see, is it slowing down mostly because of the rates that have increased from the Fed as they increase the rate? We see the mortgage rates go up and that's kind of slowing people down.
Yeah, that, and then I think definitely that, but also inflation just in general, right? Everything's costing a little more, so our money doesn't feel like it's going as far. I mean, I'm sure you feel that. I feel that, right? I
Right. Yeah. Who
just
doesn't?
feel it. So I think everyone, just those things combined. hmm
So are you seeing a lot of people like when you used to quote somebody on a mortgage rate, you would, what were the rates? What are the rates now versus what they were before, and how is that really affecting payments?
Yeah. So we were honestly closer to, the high fives, low sixes for a really long time. And you can still get there, it's just that's not the flat rate or what we call the par rate, the rate where you're not being charged anything, right?
Hmm.
You're looking at that rate. I mean, you're in the high sixes right now. And that's just since Friday.
Wow.
Friday, we went up in rate. And then Monday and Tuesday, we went up as well. Today has been a pretty level day, but our market has been doing this for the last, 8 months or longer, where we're just like this.
Up and down.
So like up a half a point and then a quarter, and then we drop 0.75, and then we go up a quarter and up an eighth, and then we go. So what we're doing the last 3 days doesn't feel good, but it's kind of the normal that we've been living in, this roller coaster. So
How much can that affect someone's payment if they go even a quarter point or half a point or half a percent? What does that really affect someone's payment?
yeah, so on a house that's say 450, thousand, 400,000, you're going to be looking at about an eighth of a point's going to probably about $30 total.
Oh, so it's not a whole ton of money, but
It's not
$30 is half a tank of gas in some places.
right. And it's not as bad as people think. And that's one reason why I always tell people, hey, still talk to your loan officer. Sometimes people, I've noticed since doing more loans, is people are very rate fixed. And I totally get that, right? I mean, you want to get the best rate you can, but sometimes they don't realize how much they're paying for that rate, right? They'll
Mhm.
it to me and say, look, I have to stay with this lender. I'm getting 5.9. And I'm like, right, but you're paying $15,000 to get that. You know how many payments of $50 you can make with $15,000? I mean, it depends. Maybe that's still the right choice for someone, and that's something to talk out with your mortgage broker. But
Mhm.
sometimes that's really not the right choice, right? Take 6.25 pay $50 or $60 more a month and have that cushion of savings. Your car breaks down, you're not putting it on a credit card. So that's something where you want to make sure you trust your mortgage broker, that you can talk through those things, because they can see your whole budget. They can see what you have in your savings, how much reserve you have, and they can help you make the best decision, because rate is not the only factor in a loan. Definitely not. There's also mortgage insurance to consider. Um, some products have a better rate, but higher mortgage insurance.
Hmm.
Well, better rate doesn't matter if you're paying high mortgage insurance.
Yeah.
So, I mean, there's just a lot of different things to look at when you're trying to get a loan besides
Well, I
just
love
rate.
that. I love that you said that, because I tell people all the time, and I've even did a video where it's cash is king, not equity. And so I love that you just said, look, maybe you get a higher interest rate, but you don't have to pay so many points. And so that cash that you have, $50, let's say your payment is $100 a month more. You're right. It's going to take 10 years, about 10 years. And that's $12,000. Let's say it costs you $15,000 to save $100 a month. Well, that's going to take you 10 years to recoup that cost, more, because in
Mhm.
10 years, it's 12,000 roughly. So that's really good advice. I think that's a really wise something that you just shared with us. And I appreciate that, because that's something that people don't realize, that if you have a situation where you get, and today's world, I just got a client that called me on the phone and said, Paris, I just got laid off at work and I need some help. What to do with my finances. And thankfully, he's been smart with his money. He's got a good reserves. We're going to do some things with his 401k because he doesn't work there anymore. Let's say somebody buys a house
Mhm.
and they pay $100 more, but in 5 years they lose their job. They got $7,000 or $8,000 still sitting in that cash account that they still have available to them because they didn't put it down to save 100. So that $7,000 or $8,000 gives them that cushion to 3 or 4 months worth of ability to go find a new job, because we don't know what's going on in this economy. As much as rates are going up and down, so also are a lot of people's jobs fluctuating as well. So I think that was really good advice. So let's say I'm a brand new person, never bought a house before, want to buy a house, super excited to maybe buy a house. Am I correct in thinking that it's too late for me because the down payments are going to be too huge, the payments are going to be too much, like rentals it's still better to rent? Like what advice do you have for somebody who's brand new, who may be thinking that, what, did I miss my chance?
Yeah. Um, well, I am obviously a firm believer in real estate, not just because I sell, but my family's been in real estate since
Mm-hmm.
3 generations ago, right? So
Mm-hmm.
I've seen that real estate can build wealth, and it's not the only thing, definitely not, but I think that it can. And I don't think it's too late. There's definitely a lot of programs out there that can help first-time home buyers.
Mm-hmm.
That's one thing that I would say a lot of the buyers that I'm working with right now are first-time home buyers trying to take advantage of either Cal HAFA, or in Utah housing. We have a lot of grants and rebate programs for nurses, teachers, healthcare professionals, emergency workers. I mean, there's a lot of little things that $3,000 here, $2,000 here, and we try to combine those to get them the best loan out there, right? To get some of their closing costs covered. And another thing that I see on pretty much every contract we're getting in for loans is that sellers are paying some concessions right now. So
Mm.
that's nice, because you're offering on a house, they're kind of, sellers know that the rates are a little higher, so you might pay 450 for a house with 10,000 in closing costs. And then we can use that to buy down your rate, or we can use that to pay your closing costs. So take today's rate, don't buy down your rate, use that to pay your closing cost. And now you don't have to come up with money for closing costs.
Mm.
And maybe use the state's down payment assistance program for the down payment. So we just closed 2 last week, where the buyers, I think they brought $230 to closing on one and 680 on the other. So, I mean,
Wow.
there's definitely,
Just because of the programs that were available that they took advantage of.
exactly. And working,
Wow.
and like, you want a loan officer that's going to be able to work with your agent and make sure like that you're getting the closing costs asked for in your offer, or that everybody knows what the plan is, right? Okay, this buyer
Mm-hmm.
has money to come in with, but they have a good job, decent credit, their reserves are there, like things are good in their life. And they can pay rent or they can pay their own home. They just don't have the down payment. And there's a lot of programs that we can use to help with that.
That's
Mhm.
really cool. That's
Yeah.
neat because a lot of people are kind of I know that there was a lot of sentiment out there that they maybe lost their chance because they didn't have money or the down payments are too big because is there I remember that a lot of the down payment assistance programs were a percentage. Are they still work off percentages as well? Or like
Yeah.
3% or
Uh-huh. So they're usually 3.5% if you're using it with FHA, or you can sometimes go up to 6% depending on the program. And then anywhere in there, right? Like I had one 5%. That's just what they needed. So that's what we took. 3.5. And the more you use of a down payment assistance program, the higher your interest rate is. So, we try to keep it at 3.5. And then that way you get the closing costs from the seller, or maybe some other grant program. And then we don't have to take the whole full 6% because interest rates do go up the more you use
okay.
on the
Just
down.
yeah, it's a higher risk to the lender because you've used someone else's money more than your own.
Exactly.
So so if
Mhm.
somebody's preparing to buy a home, advice would you give them? Maybe they're 6 months out, maybe they're a year out. What kind of a like I know something that's really crucial to someone obviously is having good financials. And I
Yeah.
talk to people about having a good emergency fund, having money set aside for your retirement, having even life insurance is a good asset. I think that on a mortgage loan application, isn't it? So
Mhm.
there's people who are doing the right things with their money are going to be looked at differently than those who haven't been or aren't, and that goes into credit scores. So what are you seeing right now with people, or how, do you have ways to help people who maybe feel like their credit might not be there? So between helping them prepare with saving and invest, putting money in the right places, plus credit scores, what kind of advice do you have there?
So a lot of times people are hesitant, right, to talk to a lender at first because they're like, wait, I'm going to call them as soon as I get everything together, as soon as I have my credit perfect, as soon as I have everything together. And I always recommend call them first because we can help direct you on how to get that in order. It's not like it's final when you give it to me. So I would say at least 50% of the time when people come to me with an application, we're just getting started, right?
Mm-hmm.
I'm going to look at it and I'm going to say, hey, pay these two debts down. Your score can go up 20 points getting these two down. Let's do that. Let's get you into this bracket of interest rates. You have a good savings. How much can you save in the next 30 days? Okay, let's put that down. So it's coming up with a plan to help people get where they want to be. And sometimes people do just thinking they're doing the right thing, they're doing the opposite. So they'll sometimes come in and say, oh, I just paid off all of my debts. And I'm like, oh no, your credit score just dropped 50 points. They're
Mm-hmm.
like,
Yeah, is it right?
what? And I'm like, yeah, I know it sounds crazy, but in order for us to get where we need to be with your loan and get you approved for what you're wanting to buy, I need you to get these down to under 20% or under 10% of the balance, then make a minimum payment for the next 2 months. Then we're going to be where we need to be. So sometimes people just don't know, they're
Mm-hmm.
thinking they're doing one thing, or they'll go and close a bunch of accounts, which is
Not good.
not good either, right? I know, because we all have to live in this credit world. So I would say contact someone you trust, a mortgage broker, to say, I just want to get the process started. Can you look at me and tell me what I need to do? Right? What
Mm-hmm.
I qualify for? This is what I'm hoping to get qualified for. What do I need to do? And usually it's going to be, let's just look at your debts. Let's get them in order. Let's get your score, because rates come in packets. I call them packets, but they're in brackets really of scores, right? So like 620 to 640 is one type of interest rate. 640 to 660 is another kind of interest rate. So we want to look at the program we're going to put you in and then see what bracket we want to get you to that makes you comfortable on the payment. So yeah, obviously if all of your credit cards are maxed out, that's not going to work, right? I mean, we
Seriously.
we need to talk about that. Let's talk about how we're getting that down. Let's look at your reserves, see if there's anything there and how long that'll take us, and get on a plan. There's always usually a way to fix it.
Mm-hmm.
It's just looking at it and doing it right, but it's definitely possible.
So
And
do you have some people that come to you thinking they're ready, and then you're like, actually, you're not ready, but maybe in 90 days you will be?
absolutely, yeah, I would say that's happening a lot right now because
Mm-hmm.
the interest rates are higher and the payments are more than they're expecting. So their debt to income ratio is too high, right?
Mm.
They weren't
Yeah.
expecting it to be that much. they're realizing now how interest rates affect payment, and they're like, ooh, and I'm like, hey, our debt to income ratio is too high. We got to
Yeah.
get down, but you have the income to do it. Let's figure out how to get this down to get you where you want to be. 90 days, 6 months, we're picking back up, and then they're getting what they want. So, and then when they get there, they're in a better position, right? And they feel comfortable
Sure.
with payment. So that's good too.
Yeah. And their scores might have gone up, and they puts them in a different bracket for a different or better rate potentially.
Yeah,
Uh,
exactly. There's also these programs too, which are allowing people with lower credit scores, as long as their debt to income's lower, to still get a good rate, even with the lower credit score. So that's something I'm looking at too. Maybe we don't want to touch your credit score. We just need to focus on the debt to income because your credit score falls in that bracket that the federal government's trying to help out right now.
Speaking of the federal government helping out, didn't we hear that Biden has done a little bit of what we were talking before the show. We called it, what do we call it? Mortgage socialism, where those with higher credit scores now may have a penalty, or well, call it what you will, but they may have a slight fee
Mhm.
to help subsidize those with not so good credit score. How's that affecting the market right now, or your experience?
Yeah, I am seeing that. I mean, it's helping the borrowers that maybe have young credit. Some people's credit scores are lower just because they're young, right? In the sense that the credit is young. They might not necessarily be young, but their credit's young. It's not
Hmm.
established, been there a long time. So there's nothing really bad, but there's nothing really good. And that these programs that Biden's put out does help that. Because what we did is we took away, they're called LLPAs, they're loan price adjusters. And then every time we price out a loan, there's these price adjusters. And one of those big price adjusters is credit score and debt to income ratio. And those are being taken away in certain programs
Hmm.
and in certain scenarios. So we want to see if you fit into that program, right? Maybe you do. Maybe that's
Hmm.
actually beneficial to you. But the people who have low debt to income ratios and high credit scores are actually having to pay more for their rates right now. It is kind of a subsidizing, yes. It's funny, and I tell people, don't just fall into this though. This is a temporary situation, probably, right? So, I mean, we don't want to be stuck there, but there is ways around it though. Like,
Hmm.
I had somebody who had an 800 and 15 credit score, and what
Wow.
15% down instead of 20%. Their mortgage insurance was $12 and they got a way better interest rate. I
Interesting.
It's weird, right? But
Yeah.
the dollar mortgage insurance was worth it because he got a better interest rate, put less down, and was actually saving money every month as compared to 20. So it's very weird, but and it's not normal, right? Like this isn't
Hmm.
for everyone, but there are ways around it to kind of you know, I guess make it work for everyone.
Which is why people who are listening, folks, ladies and gentlemen, please get a good agent. Get somebody that knows the programs, knows how to kind of work the magic, if you will, of the lending world. Things like what you just said. It doesn't make sense that 15% down with a little bit of mortgage insurance would be less than 20% down. That just doesn't make sense. But if it worked out and the math is there, then that's awesome.
No, it doesn't make sense. I agree with you, but it does make sense when you look at the whole picture. And that's why, it's good to really have someone that you trust looking at the whole picture for you, because there's all these little rules and, you know, different loopholes in these loans that I don't want to call them loopholes, but openings, right? To where you can
Hmm.
this one and not on this one. And you aren't married to this loan. So there's also that, right? I mean, when interest rates do drop and the economy changes, you can change out of the loan. So you want to make,
Refinance.
yeah, fit your budget now, refinance in the future. But yeah.
What about somebody who's maybe bought several houses right now? Is there anything new that they need to be aware of? Somebody who's kind of had some experience with real estate. Are there any new things that anybody else needs to be aware of?
You mean like if they're going on like their third or fourth
Yeah,
home?
yeah, or something like that.
The investment rate. So let's say you want to buy like rentals or you're trying to buy multiple homes, a second home. Those rates are pretty high right now. They are, flat over 7 right
Oh
now.
wow.
If you are trying to do investment properties. So, one
What's
way
the
with
what's the
that,
minimum down payment for investment property right now?
the minimum down payment for investment property. So second home is 10%.
Hmm.
Investment property, we have some at 15%, 20%. Your best pricing and rates are going to be at 25%.
Wow.
So, but right now, I have some people that are doing second homes um, at 10% down, right? But the rates are high. I mean, so they're asking for closing costs for the seller, and they're going to use
Hmm.
that to their rate. So you just have to be aware of the higher rate for investment for multiple homes. Um, that's one thing that you kind of have to be aware of, and making sure that you understand the rules of having multiple homes. Like if you decide, I have a lot of people right now that have, they're living in a condo, townhome, just a smaller home, and they want to upgrade, but their home they're in right now has a 2.9% interest rate. They don't want to get rid of
Hmm.
that. They want to turn that one into a rental, buy another one, right?
Hmm.
So in doing that, you want to work with your mortgage lender to find out how much rent do you need to try to generate from the house you're leaving. What kind of lease do you need to get on it? Obviously, you're going to be living it till you close. So the lease starts after. So you need to make sure your mortgage broker can use a lease going in the future to qualify
Hmm.
on that income. Um, if you're buying a second home, we need to know how much money it's going to be bringing in so we can count it against your income. So those are kind of some things that are a little bit trickier when you're trying to buy multiple properties or taking your current home, making it into a rental and going to the next one. Just making sure your debt to income ratio balances.
What are maybe some advice you'd give anybody right now in the marketplace? Just some final thoughts maybe on what you would say to somebody that's looking to buy a house or worried about buying a house right now.
Um, I would say, honestly, now is a pretty good time to buy a house because you can actually negotiate. I don't know if you guys remember, but it's definitely not, you're not going to get the world, and houses aren't going 50,000 under or 20,000 under. We're not in any type of market like that. So I don't want to give the wrong idea. We're in a very stable market. And before the
Hmm.
craziness, this is how the market, right? You come,
Hmm.
you offer them a reasonable price, you both give and take. And that's really what I'm seeing in the market right now. It's very balanced in a lot of ways right now.
Nice.
Supply and demand, I see that being really great. Um, just one thing I would say to remember is when you are offering, just try to get some seller concessions. Sellers are used to that right now, and there's no harm in it, and it will help you get a better interest rate or pay some of your closing costs so you can keep your savings. I don't know how long that'll last, right? Because if interest rates drops, sellers will stop wanting to pay for that. But right now they're willing to pay for some of that. So that would be my advice. And just realizing that, yeah, as soon as rates drop and they go really low, or if they ever, I don't know if they'll ever get that low again, but if they go lower, then people start overbidding on homes. So
Hmm.
great if you can get in now where you can actually negotiate, get a good price for the home, because that's forever. The price of the home's forever. Get that, get the rate as best as you can get it, and then when times come, try to refinance, but don't use all your cash buying down a rate. That's the biggest mistake I see people making. It's just using all their cash to buy down their rate in a panic. So
Yeah.
mhm.
I know when we had one idea for when we bought our house, and then it ended up being a whole different situation, and we scrambled and got it done. And there was some creativity that ended up happening even when we bought a couple years ago. So we really appreciate what you did for us, Jody. And anybody who's interested in buying a home, reach out to Jody. I'll put a link in the description below, or her email address. Well, I really appreciate your time, Jody. Thanks for taking some time to chat with me and our viewers to see if there's anybody who needs to know what. Hopefully, this information was valuable to somebody that is looking to buy a home, is in the market to buy a home, looking to figure out what to do, even to sell their home. And know that, hey, if you're going to sell your home on the river, I mean, we didn't really talk or touch on people selling their homes, but based on what you shared, I think we can extrapolate that people who are selling your homes, be ready to negotiate, be ready to maybe offer some concessions. Some of the money that maybe you're going to have, you feel like you have hundreds of thousands of dollars of equity, and that's great. And you're in a great place, but you may have to use some of that to help the buyer out because of the way the market's going right now. Is that fair to say?
Exactly right. So at listing presentations, we would be telling sellers, hey, it's a good market. If we price your home compared to the comps and where things are selling, you're going to sell. You're going to get some offers, but be prepared that these buyers, it's a harder market for them. They have a lot more fees to pay up front. So right now, buyers are asking for some closing costs. Let's, work that into the price, or remember that you may negotiate a little bit on that. And that's okay. I mean, really we kind of forgot as a whole what the real estate market was before all this craziness, but it's always been that way. I mean, we've been working together for a long time, but I've been doing this. This is my 25th year, which is crazy. And
Hmm.
the normal market is negotiations. So it's always been. So
That's
um,
awesome.
that we're kind of there again. So
Awesome. Well, thanks again, Jodie. Appreciate your time. There will be links in the description below if you want to reach out and talk to her, or if you want to reach out and talk to me about how to help you prepare and be ready, so that when you do meet with a low mortgage or loan officer, I've also been able to coach you on some ways to be ready for that. So hopefully you got some value out of this. Have a wonderful day, and we'll see you on the next video. Thanks a bunch.
Paris. Okay. Bye.